If you're expecting a bunch of guru fluff and get-rich-quick garbage, you've come to the wrong place. This show is the no bullshit real deal.
No bullshit real deal.
I'm Larry Harbolt, and they call me the real deal. Welcome to my show. This show is aimed at providing you with quality information so you can make more profit in the fastest way possible without making costly mistakes from the deals you do.
Let's get started.
Hello, everyone. Today's podcast is going to be something that I've done some research on, and many of you know we've asked those of you that listen to my podcast some questions about what it is you need most to help you with your business. And I get a lot of questions about how not to lose money on the properties that many of you are trying to buy. Losing money is simply a problem that you need to solve, yet it's one of the greatest obstacles most newer investors struggle with. Now, once you understand that no matter how much you know, how much you do research, you do, no matter what you pay for any property, when circumstances make unforeseen changes, there's a chance, no matter what you do, you could lose money. That's a given. You have to understand that. So it doesn't matter how much research you do. When the world changes, it could affect how much money you make. Now, having said that, the secret of losing little or no money comes down to a few things I believe every investor must do to ensure they lose less if things do change in the economy or in the marketplace, wherever they're located. But this is important information everybody needs. One thing I've learned over my 40 years' experience as a real estate investor is you can't know too much about the areas you buy houses in. You need to know those areas like the back of your hand. I don't believe in the shotgun approach of buy a house anywhere in your area. I believe in focusing on specific areas that have what I want in the properties that I buy. Another, the neighborhoods that you're looking for houses in. I like neighborhoods. I like neighborhoods where people want to live, not have to live. That's very important. I need to know the mixture of homeowners or tenant-occupied properties in the areas that I buy in. I find that there's three different kinds. There's mostly homeowner neighborhoods. How do you tell those? They have pride of ownership in most cases. You've got mostly tenant properties in a neighborhood, and what you'll find is less pride of ownership. You'll see properties not taken care of, cars parked on lawns. When I see the beautiful metallic cars with the huge wheels that are real thin-tired, most of those are tenant-owned or tenant properties. So I understand that. Now, some neighborhoods you're going to find some homeowner, some tenant-occupied properties, but you need to know those areas. Now, the prices in those areas is very important to know. You have to know what they're asking. Now, that has nothing to do with the value of the properties because they're both very different. Just because they're asking a price doesn't mean that's what it's worth. And let me give you an example. Where I live, I want $100 billion for my home. Now, that don't mean anybody in their right mind would give me anywhere close to that. So the price has little to do with the true value. You have to realize that. You have to know the amenities that the property has that you're going to buy, because today's buyers or renters are looking for specific things. Now, the location of the properties you buy, I say never on a busy street. Tenants don't like busy streets. I've talked about this before. When you have a property on a busy street, they don't want their children darting into traffic, chasing a ball. They don't want their pets running out into traffic. They don't like the noise. Those houses will be harder to rent or sell in many cases. Never near a busy airport. A sewage disposal plant, which is I don't have to explain any farther on that. Or anything near a busy highway because of the noise. These are important things you need to know. Stay away from those areas. Stay away from run-down areas of town where houses are not being taken care of. It's not going to profit you well to go into those neighborhoods. because the age of houses and neighborhoods is going to be critical to your ability to rent or sell those properties. Now, that's just to name a few. Another critical point I need to make, that you need to know the numbers in great detail of every property you plan to buy before you make an offer. Because if you pay too much for a property that you plan to fix and sell retail, how do you expect to make a profit? You have to know your numbers. If you're going to be using institutional financing, high interest rates, high payment amounts will prevent you from making a cash flow if you're going to keep it as a rental. I don't like institutional loans, period. I like to deal with the seller. Now, you have to know what is the after repaired value of the property. If you're going to buy, fix, and sell retail, you have to know what it's going to be worth when you're done. That is going to be the starting point of doing your numbers on the property. You have to know what the property will rent for. If you're going to buy a property you're going to keep as a rental property, you've got to know what it's going to rent for when you get it finished. And that is going to be the starting point of how much you can pay for that property. What's your monthly costs? Do you have monthly costs? Absolutely you do. Every property has monthly costs. Now you have to know, what are your holding costs? Let me explain. Holding costs are costs every property owner that owns a property has. Now, they may not be going out of your checkbook every month, but they are costs. What I mean by, you have a mortgage payment, water, sewer, electric, garbage, lawn care, pool care, snow removal. These are costs. No matter where you live, every property owner has to think about. You have to factor that into your buying decision, because it's going to come out, if you don't, out of your profit when you sell. So you got to know your holding costs. What's the age of the houses that you look at? I learned a long time ago that the houses that were built a long time ago, they're smaller, less square footage. Fewer people want to buy or rent those properties because, in my opinion, you've eliminated about 75% of the market. Simply because if it's a small 2-bedroom house, maybe a couple could live there, maybe a couple with one child, a single parent with 1 or 2 children, as long as they're of the same sex. But if it's a family that has a boy and a girl, they've got to have a 3-bedroom. These little houses just don't work. You have to know what's the true and realistic cost of the repairs you've got to do before you make your offer to buy. If you don't know what the repair costs are going to be, boy, you're going to get an education someday when you didn't factor something in that you should have. That's very important to know. Now, what is the right rent to charge to keep the property rented long term? Too many people, they buy a property, they fix it up, and they try and get the maximum rent they can get. I understand that. They want to make as much cash flow as they can. But let's think about that a little deeper. If I charge the highest rent, even higher than what the property should rent for, do you think that in a few months, the people that live there, the tenants, are going to be looking for something else? If they move out, you realize every time a tenant moves out, you have to fluff it up. New carpet, paint job, fix holes in the wall, whatever it may be. There's a cost to that. If the tenants move every year, that's a cost that I don't want to deal with. I would rather drop my rent a little bit and keep my properties rented so a tenant will stay. Now, how long? I say I would like my tenants to last 10 years if I could. If I could get a good tenant, that's 10 years. I don't have to come up with that money to fix everything. You're going to want tenants that are going to stay for years if you can get them. Because, if they move, it's costing you money. And I don't recommend taking a property subject to that was financed at the peak of the market in 2005 to 2007. Here's simply why. Most of those properties were financed at the peak of the market when values were high. So they are going to most usually have a high payment that hasn't paid down hardly at all to today. So they have no equity buildup to speak of. Now, that to me, if I can't buy some equity when I do a subject to deal, I don't want it. Along with that high payment, usually they may have a modest interest rate, but they just haven't paid anything down. Now, if you have a plan to fix and resell, doing a subject to deal, the profit you make after you fix and sell the property will also be based on the same things. Anytime you pay a high price for any property usually means you also have a high payment. The interest rate may be low enough, but if you're buying a rental property, a high price with a high payment usually won't allow you to cash flow that property very, very much. And it'd be nice to have some cash flow to live on, wouldn't it? So if you don't set aside, in my opinion, 1/12 of the annual property taxes, 1/12 of the annual property insurance, at least 10% of every month's rent to set aside so that you've got money to fix the property up when a tenant moves. And if a tenant doesn't move for years, that fund will build up to help replace the cost of the roof, a hot water heater, an AC unit, a furnace, whatever you need. You need to set that money aside. Now, if you aren't taking the money every month and depositing it into a special account, I use a checking account, simple checking account. Everything from everything goes into a checking account for those items. So when those things come due, I can write a check. So when you need the money for those items, if you haven't done that, you're going to wish you had. So that is very, very important. That's things that you need to know. And if you also don't know what the actual holding costs of every property, what they really are, you have no idea how much profit you will actually make when you sell a property. In my market, I figure 1.5% of the after repaired value of each property as my holding costs. Now, what are the holding costs again? The monthly payment, the water, sewer, electric, garbage, lawn care, pool care, snow removal, association fees. All of those are factors that you must figure in. These are real costs nobody takes into consideration except some of the serious investors that have been doing this for years, because they are actual costs. You have to factor them in. So it doesn't matter if you do or not. See, the inexperienced investors usually, they don't figure these because they don't think about them. They don't know about them. You need to think about that because that has to be part of your buying decision. You need to use a formula that's going to allow you to factor these in. So if you're not using a simple formula that factors all these costs in, I don't think you're making the amount of money you should make because you're not in the real world. And I can't overemphasize knowing as much about your market and the conditions of your market before ever making an offer to buy any property. It's called work, but it can be very, very profitable work once you become proficient in knowing your marketplace and your numbers. These are important factors you have to know, because if you don't know, you're guessing. And when you're buying property and you're guessing, sooner or later, you're going to take a financial seminar I know you don't want to take because it's going to be an ugly one. Know your numbers. I can't overemphasize this. I can't explain it any better than that. You have to know your numbers. And if you don't want to work and you've got all the money you need behind you that you can borrow, don't get too confident that you're making good deals just because you can throw money at a deal. The numbers are critical if you ever want to acquire the type of lifestyle that you're looking for. This is critical to your financial future. So I wanted to go over this because I think these are critical pieces of the puzzle everybody needs to think about. So that's going to wrap up this episode of my podcast for this week. Now, I hope you found some value from today's topic, and I invite you to head over to LarryHarbolt.com and register to keep up to date with my tips and my ideas to help you become a better real estate investor. If you haven't already registered, head over to LarryHarbolt.com/register to get access to my free phone script on how to negotiate with sellers over the phone. Be sure to tell a friend and leave me a review on your podcast player. Your reviews help me to know that the information that I'm providing to you has value to you. That is important to me. So I hope you all have a great week. I'll see you next time on the Real Deal Podcast.
Thanks for listening to the Real Deal Podcast with Larry Harbolt. To learn more about investing in real estate, head on over to LarryHarbolt.com and register for his educational tips and articles delivered by email.